Did you know that the financial statements of major corporations like Amazon, Apple, and Nvidia are built on the same essential element as the financial statements of small businesses? That essential element is the general journal. The general journal is a business diary of sorts and serves as the foundation for all financial statements, regardless of a company's size. In prior videos, you learned about step 1 of the 9-step accounting cycle, the analysis of business transactions with the help of the accounting equation or T-account. In step 2, the accountant journalizes transactions in the general journal in chronological order, meaning in the order in which the transactions occur. The journal is sometimes also called the record of original entry because it's where transactions are first entered in the accounting records. Accounting students learn the manual recording and later posting of general journals, or also called journal entries. But in most businesses, even small ones, journal entries are entered into an Excel template and then uploaded into the accounting system where they are automatically posted once the journal entry is approved. To learn about the step-by-step process of journalizing business transactions in the general journal, we'll first talk about each of the process steps and then practice the process by again looking at the transactions of Eli's Consulting Services. There are prerequisites for journalizing the business transactions of the business. First, you analyze the business transactions with the help of two tools that we talked about, the accounting equation and the T-accounts. That's helpful because you're just getting started. Later, as an accountant, you would likely only use these tools for very complicated accounting transactions. So first, analyze the transaction. You do that by first determining what accounts increased or decreased, then identify the account types for the accounts, and after that, use the dealer mnemonic to find the debits and credits. That will tell you how to record the transaction. Before you do that, though, you would also check the supporting documentation. Your reputation as an accountant is on the line when you record transactions without the supporting documentation or backup. Let's say you've done all that. Then the next step is to obtain a general ledger template or form. And in most businesses, accountants use Excel templates. You'd enter the date into the date column, the account name of the account you want to debit, followed by entering the debit amount into the debit column. On the second line, you'd slightly indent and enter the account name of the credit transaction into the description column. Then enter the credit amount into the credit column. And finally, enter a short but concise description on the third line into the description column. Let's practice this concept with the help of Eli's Consulting Services. For the first transaction, Trayton Eli obtained the funds to start the business by withdrawing $100,000 from his personal savings account. Before the accountant records an entry into the general journal, they analyze the transaction and examine the supporting documentation. The supporting documentation with the $100,000 contribution is a memorandum from Trayton Eli to Sergio Sanchez. Additional documentation might be the deposit into the business's bank account and legal documentation that shows that Trayton Eli gave Eli's Consulting $100,000. Accountants care about the supporting documentation and the audit trail, which is a chain of references that makes it possible to trace information, locate errors, and prevent fraud. The audit trail provides a means of checking the journal entry against the original data on the documents. Documentation is critical. The external auditors will want to review the supporting documentation at year end. However, sometimes the supporting documentation is confidential. It's like, for instance, severance amounts when there are company layoffs. In those cases, the journal entry will reference the person or department that can provide documentation upon request. When we previously analyzed this business transaction with the help of the accounting equation and the T accounts, we determined that we need to debit cash and credit Trayton Eli Capital $400,000. As a reminder, every transaction has at least two parts and needs at a minimum a debit and a credit. The total debits must equal the total credits. So to start the journal entry, leave a blank line between the general journal entries. Some accountants use this blank line to number each journal entry. Again, these are the rules for manual journalizing of transactions. In a business, you would use a separate template for each general journal or journal entry. To record this business transaction, we debit cash for $100,000 because cash is an asset and assets increase when they are debited. And we credit the capital account for $100,000 because capital is part of owner's equity and owner's equity increases with credits. Debits and credits can be challenging for accounting students. Please see the video about the three-step process for mastering debits and credits if you need to revisit the concept. In transaction number 2, on November 7th, Eli's Consulting Services issued check 1001 for $5,000 to purchase a computer and other equipment. We can see the journal entry documentation, but in a real company, this support would not be sufficient because it does not provide the details of the purchase, such as model numbers, specs, etc., and evidence that Eli's Consulting paid the information technology store. This document looks like it is a check stub from a checkbook. The accountant's job is that of the guardian of the general ledger, the place where all general journals are permanently saved. And the general ledger is the foundation for the financial statements. It is definitely not an understatement to say that the basis for all financial statements begins with the accountant's general journal and the supporting documentation. The necessary documentation in this case should be a copy of the invoice from the information technology store. The invoice should detail the items that were purchased and should show Eli's Consulting Services as the purchaser. Accountants are responsible for verifying proper documentation before recording any entries. When we previously analyzed this transaction, we determined that equipment increased because equipment is an asset and assets increase with debits. We also determined that cash decreased. Cash is an asset, and when we want to decrease an asset, we use a credit. So to journalize this transaction, we debit equipment and credit cash for $5,000 and add a description, like in this case, purchased equipment check 1001, once the proper documentation has been received. In transaction number 3, on November 10th, Eli's Consulting Services purchased office equipment on account for $6,000, and we have the invoice here from Office Plus. The invoice shows an invoice number, date, order number, shipping, and payment terms, the name of the buyer, and item details for what was purchased. This invoice shows the right level of support. Did you know that many businesses do not record assets for equipment and supplies that cost less than a certain amount, like for instance, calculators? The threshold depends on the size of the business. The materiality threshold differs from company to company, but the larger the business, the larger the threshold. The accountant is responsible for the accuracy of the invoice and the payment terms, as well as the proper purchase order number. In addition, the accountant needs to ensure that the correct sales tax is calculated. So if the information is incorrect, it needs to be revised. For this transaction, we had previously analyzed it and determined that we debit equipment and credit accounts payable for $6,000. We enter that information into the general journal by writing the date, the account equipment into the description, and the amount of $6,000 into the debit column. On the next line, we slightly indent and write accounts payable into the description and $6,000 into the credit column. On the third line, we write a short description that summarizes this transaction. For transaction number 4, on November 28th, Eli's Consulting Services purchased supplies for $1,500, check 1002. Again, this is not proper documentation. We don't have an invoice. In fact, we don't even know if supplies were purchased. We also don't have a copy of the check. This would not pass an audit, and I would be concerned if a business owner provided this as a receipt. During an audit, the auditor would ask for the invoice from Office Deluxe, a copy of the canceled check, or other proof that the amount was paid. In some cases, the auditor might even ask for verification from Office Deluxe directly. For this business transaction, we debit supplies for $1,500 because supplies increased. Supplies are an asset, and assets increase with debits. And we credit cash for $1,500 because cash is also an asset. And because it decreased, we credit cash. For our fifth transaction, Eli's Consulting Services paid Office Plus $2,500 and partial payment of invoice 2223, check 1003. In this case, we have the original invoice from Office Plus for $6,000 as support, but we would also need a copy of the check, or the Zelle Venmo payment record would be good additional support. For this business transaction, we debit accounts payable for $2,500 and credit cash for $2,500. Why? Well, our accounts payable decreased, and accounts payables are liabilities which increase with credits and decrease with debits. We credit cash because it is an asset, and a decrease in assets decrease with credits. Next, for our sixth transaction, Eli's Consulting Services wrote check 1004 for $8,000 to prepay rent for December and January. Again, this is not proper documentation. In this case, I would like to see the rental agreement and a copy of the check or other payment remittance. When we previously analyzed this business transaction, we determined that two things happened. The company now has more prepaid rent, and cash decreased. Prepayments of rent are an asset, and assets increase with debits. The second part of this transaction is that cash decreased. Cash is an asset, and assets decrease with credits. So we begin by entering the date into the date column, the word prepaid rent into the description column, and the amount of $8,000 into the debit column. For the decrease in cash, we slightly indent the second line and write cash into the description column and enter the amount of $8,000 into the credit column. These final 6 business transactions and journal entries are for revenue, expense, and a withdrawal transaction. Revenue transactions should be supported by invoices and potentially a contract between the client and Eli's Consulting. The supporting documentation for salaries and wages is the payroll register, and the support for the utilities expenses is the utility bill. For Trayton Eli's withdrawal, I would like to see a document signed by Trayton and acknowledging that he received $5,000. Now let's talk about the journal entries. Please remember that every transaction has 2 parts and at least 1 debit and 1 credit. For the 7th transaction, Eli's Consulting performed services for $36,000 in cash, which means that we need to increase cash, which we do with a debit of $36,000. Our fees income also increased, and revenue increases with credits. Therefore, we'll record a credit to fees income. For the 8th transaction, Eli's Consulting performed services for $11,000 on credit, which means that we need to increase accounts receivable, which we do with a debit of $11,000. Our fees income also increased, and revenue increases with credits. Therefore, we'll record a credit to fees income of $11,000. Next, for our 9th transaction, we received $6,000 in cash from credit clients who previously received services on credit. In this case, we'll debit cash because assets increased, and we'll reduce accounts receivable with a credit of $6,000. For the 10th transaction, we paid $8,000 in salaries and need to increase our expenses by debiting salaries expense for $8,000 and reducing our cash with a credit of $8,000. The 11th transaction is very similar, but we debit utilities expenses and credit cash. For the last transaction, we need to debit the drawing account and credit cash for $5,000. I hope this video helped you learn about the general journal and practice the concept with the help of Eli's Consulting Services.